Hello there, Maverick traders. This is Rob Reinhold. It is August 10th, and today was a really big day. So let's go ahead and check it out. In this session, of course, we always review the day. We're going to take a look at all the numbers. We're going to take a look at all the news, and then we're going to go into, do we have a score change in the markets? And we do have another score change. Last Thursday when I did this, we had a score change from +2 to +1. I think you all know where we're going, but I don't want to give away it until we get to that point. And then, of course, we're always looking at trading setups. I've got 3 nice setups for you today, 1 bull and 2 bears. So let's get started.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
Looking at the numbers. Now, if we just take a look at the numbers, the market didn't look so bad today. So if we say, oh, look, the Dow was flat, up 0.1%. S&P flat. Q was up a little bit, Russell down a little bit. Oil did take a hit. It's been really strong lately, so it has some profit taking. If we just look at these numbers, nothing much happened today. But wait till we get into the charts. Before we get into the charts, let's talk about the big news of the day. The CPI report came in an hour before the bell, and it came in at 0.2%, as expected. That's really good news for the markets. And actually, to give a little bit better news, the year-over-year number came in at plus 3.2%. Expectations were for plus 3.3%. So pre-market, the markets rallied. Everything looked really great. And really for the first 2.5 hours of the market, we were having a really nice rally. And a really nice rally off a very significant support point. And then the 10-year bond spiked. And that took the legs out from under the market, and the market actually lost all of its gain. We were up 1%. NASDAQ was up 1.5%. Everything closing negative or sideways, that's really bad. And it really is about this bond yield rise. So let's take a look at the internals here. We take a look at the internals, we can see that today was a little bit bearish on 53% of stocks went down. But take a look at this plus or minus stocks above the 50 moving average. We were at 70% just a couple weeks ago. We're getting really close to a neutral market, and we're going to take a look. All of the signs and technicals are telling us that we're getting really close to a neutral market. If we take a look at the S&P, we've had several times where this come and failed miserably. So we said, okay, 20-day moving average was the first test. It failed it, and it failed to break back above it. However, we didn't break down. We were just in this base. So we said, okay, we don't know if it's going to pull back. A lot of times you don't get what's called a V bottom. You get a W bottom or a messy bottom. I know that doesn't sound all that great, but sometimes you get these messy bottoms and then it breaks up higher. Okay, as long as it didn't break key technical areas, we were just fine with this messy behavior. We backed off of our bullish outlook and said, hey, as we're close to a +1, don't be too far over your skis here. But you can see here, the longer and longer it hung at this level. And today's failed rally, if today closed with a big green candle, I would be here with a different story. I'd be saying, hey, that was likely the bottom. It's time to get back to being more bullish. We reversed it all. But look, this is an ugly close. Do I think the market is heading lower? Yes, I do. That is my belief. That is my feelings. Now look, that might be over, the 25 years I've done this. I've got a better feel for it, whatever. It's still my belief. Has anything gone broken technically where we are no longer in a bull market and we're in a bear market? And the answer is no. Now look, we've had to ratchet back from where we were +3 back here. There's no question we've ratcheted back to +1, no longer as bullish. Is there anything here telling us to be bearish? Not yet. But let's talk about the things that would trigger it. The first thing is this resistance that we broke out of on the S&P. So that's somewhere around 44.40, I'm going to call it. Now we also have the 50-period moving average right underneath that. at 44.32. So look, 44.30. It looks like this market wants to go test that. That's about 40 points away. That means that we probably have about another 1% down before we test these levels. And the way these things usually happen, if it is going to hold, you get a pierce intraday, or you get a big nasty candle one day and then a recovery the next day. I think we are going to come down to this level at least, and I think we are going to pierce through it. And if we bounce back up and recover very quickly, it's just going to be like, hey, we're at a zero. We're at a we don't know what's going to happen here. If we break and we continue down, guess what? We will be switching our outlook to -1, -2, and then to -3 if necessary. So as you can see, we are in a really important spot right here. Tomorrow's candle, I think my opinion is tomorrow's candle is going to take us down to 44.40 or 44.35, somewhere around there. And that's where we're going to close on Friday. We're going to close right at the key level support. And the market's going to go over the weekend all panicked. And one of the two things is going to happen on Monday. Either we get a big drop in the morning and then we recover, and that was just a pierce, or we have a good open on Monday and then it deteriorates. That would be worse for the market. I would actually be more bearish that if the market gapped up Monday than if it gapped down. We've definitely seen that over the years. Anyway, what I'm saying is, right here, right now, we don't know. We don't know if it's going to be a break and pierce. We don't know if it's going to be a bounce, or we don't know if it's going to be we break and we've now have a confirmed downtrend. But what I do want to say is things are going to change quickly here. You can no longer be too far out on the bullish side. We've been talking about that for the last week or two. We got to dial that back. You can't go net short yet. Now that is just the S&P. Let's take a look at the Qs, because the Qs are looking much, much worse. Take a look at where the Qs are. The Qs are at or under their prior resistance line. They are at the 50-day moving average. If we have a red candle tomorrow, that is a really bad break for the Qs. And like I said, I want to wait till Monday's candle. If we get a Monday candle that recovers, that's just going to be a pierce. A lot of times these things come down and pierce, and then they recover. If we don't get that recovery on Monday, and Monday's candle is one of these, guess what? We will absolutely be going to a -2 on the Qs. So right now, Qs are really at a -1 at this point. They're really at a -1. S&P, probably to 0. Again, I'm giving it all away. We're going to be doing the scoring here in a second. Let's take a look at the heat map. There's really nothing to tell in the heat map. It's bad everywhere. There's a couple bright spots of green, but really, as you can see here, it's spread out. There was not one story that was more important than the other as far as sectors go. So as we just walked through our analysis of the S&P, we talked about how the S&P is now below its 20-day moving average. Its 20-day moving average is now sloping down. So this over here, we had a +1 for a bullish 2050 slope. Guess what? That is no longer bullish. We now no longer have that slope. We are below the 20, but we are above the 50. So we're below the 20, above the 50, and the slope is 0. We're at 0. And that is where we're going to go into the weekend most likely, is still at a 0, unless we get a huge breakdown on tomorrow, which I think we're just going to get about a 1% move down. We'll see what happens on Friday. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? Let's get into some trades. I've got one bull for you, and I got 2 bears. And I got 2 bears because we're at that point where, again, I know I'm still leaning a little bullish. I need to get ready to flip to bearish if I need to, which means I can do that by one of two ways. I can, if I don't have enough trades in my account, I can add more bears, which will make me net bearish. Or if I have a lot of trades in my account, I can pare back some of my bulls. Pare back some of my bulls, take either some profits, some gains, some losses, whatever, to make it more net bearish. So I want to get started on preparing on getting net bearish. But let's talk about one bull here that's holding up really nicely, and that's AbbVie. Someone forgot to tell AbbVie that the market is shaky right now. Just a beautiful, orderly bull pullback. We got our bounce. Now look, this thing is not exciting. This thing is a very slow mover. And this is exactly what we want to play bullish in this kind of market. If we do break down, we want to find something that's not going to break down like a Tesla or a Microsoft or a Google, something that's going to lose 10%. No, look, worst case scenario, this thing goes down a couple bucks. So what do we like to play on this? Diagonal call spreads. A +1 strategy, diagonal call spread. I'm really going to be looking at the 152 for tomorrow. So if there's enough money in it, depending on where it opens, I'm going to grab something like the 145 for either September, maybe September 1st, and I'll sell tomorrow's 152 if there's some premium in it still. I'll be able to sit through it one day, take a look at where it is at the end of the day, and decide, based on Friday's close, do I really want to hold this thing over the weekend? If not, I can just take it off for probably small gain, break even, small loss. If the markets have a nice day tomorrow, I would love to go into the weekend with just long calls on this at the 145. So there are still some good bullish trades out there. But let's focus on the bears. This is Enphase Energy. The solar stocks had some really bad earnings report. This was one of them. And you can see the earnings, they gapped down, had a little bit of bounce that first day, and then people kept thinking about it, said, no, it's worse than we thought. As you can see, we've moved down. Okay, we had a little 2-day rally here. We had a bearish candle here. Bearish candle tomorrow. This thing is definitely confirmed. Look, these were very difficult trades for me to get in the first part of my career. And let me tell you why. I would look at this stock and say, well, geez, this stock like a month ago was 190 and I'm supposed to short it at 135. Haven't I missed it? Aren't I late to the party? I don't want to be chasing it. Yeah, those all the things I use to keep me out of them. I would watch these things tumble and tumble while I tried to short the thing that had been strong and that never sells off in the market sell-off. I love these trades now. The weaker, the better. The further away from, again, I want to find the weakest stocks in these moments. So Enphase, and I think a really easy trade on this one is a 130. And based on where I get in tomorrow, 130, 135, or a 130, 140. Bear call spread. Just a straight vertical spread, go out about 3 weeks. I think that's your trade. The next short is Norwegian Cruise Line. This thing has had a monster run. Monster run, base, breakout, pullback, beautiful bottom, and then earnings come out. All right. Now, I used to call this trade setup a stock that had been super strong and then had a gap down, and after the gap down, it never was able to bounce. I used to call these first stage downtrends, but I was doing a live session with our group, and I said, that doesn't have any oomph. That's not a cool name. Help me think of a cool name, and a great name that they gave, and this is now what we call this trade here at Maverick. This is the belly flop. It's a belly flop. Stock that was doing really good, looked really great, and then finally jumped off the diving board and flopped. Could not bounce back up. I love this pattern. I'm looking at a 17, 18 bear call spread. If I want to, I can go maybe to a 17, 19 if I want a little bit more theta. But look, I want to be directional on this one. Would I do long puts on this one? Probably. Am I going to do it? No, I'm going to do my spread. But if someone said, Rob, I want to do long puts on this to get aggressively short, I have got no problem with that, especially as this market is breaking down. So that is Norwegian Cruise Line. Let's wrap up this market outlook. So I've got markets unlikely to hold this point. We still have one more point. We still have that 50-day moving average to break. The Qs likely break it tomorrow. But guess what? I don't care if the Qs break it. I want to see the S&P break it. I want to see both of them break it and hold it. Then I'll get to a -1, -2, and get more bearish. But right here, right now, it's a clear signal you don't want to be too bullish here. And if you are too bullish, use some opportunities to scale that back. Remember, when we're trend traders, we pour on our bullish or bearish lean during the trend. And we have no idea when that's going to end. No idea. But for the most part, we want to stay with that bias as long as we can, but fully understanding at some point it's going to change. We can't rely on us to know when that is because we have all these biases, we have all these emotions swirling in our head. We have to trust the charts. And the line in the sand that we use at Maverick is if the market is below the 50-day moving average, you want to have more shorts than longs. You want to be net short. We're not there yet. We can't go there until we get the technicals because everything else is just using our feelings and opinions. Once that breaks, we will absolutely be ready to go net short. So you better be pulling back your bullishness and getting close to zero. So when we do get the signal, and if we get the signal, then you can start to add on some bears and get more bearish. We might have an update tomorrow on the trading room, or it might happen next week, but we'll see. Tomorrow we do have the PPI. Tomorrow morning, 8:30. Consumer sentiment, don't worry about that one. The PPI is the big one. And that is it for the market roundup. We'll have a big update for you on the trading room over the weekend. Goodbye, everybody. Take care.